The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. I was going to say it's election day, folks. Hold on to your hats, and hold on to your hats for election week, okay? Because as I've been talking about, unless you get a dramatic win, right, by a preponderance in many states, it's going to take potentially a few days. That is by design. I've been talking about it. If Pennsylvania's in play, and Pennsylvania is probably in play, this is going to be a close election, it is going to take 2 to 3 days at least to count those early mail-in ballots, and that's going to take some time. And so we get to see it unfold, of course, today. Going to be interesting to see how the market comes into this one. Probably a little bit of muted reaction all day, as in muted non-reaction. What is it reacting to, right? We're reacting to nothing. The market is in wait and see mode right now. And boy, this market is anxious to do away with the uncertainty that comes with something like a presidential election that is so evenly split, very divided, the country. Nonetheless, it's election day. Get out there and vote if you haven't voted yet, folks. That's the bottom line. No matter what you believe, get out there and vote. And I believe in the universal power, as in if all of us get out there and vote, that the correct outcome comes to light. You know, and the discourse, keep it active. We love it in the den. And boy, yeah, I agree, Dan. How about the end of the commercials, the end of the text, the end of all that stuff, potentially? We'll see. Election season, always around the corner. I kind of wanted to say tongue-in-cheek. Doesn't 2028 start tomorrow? I kid. But to a certain degree, it just never ends, election season. And don't let it consume you, folks. No matter what happens tonight, okay, you're going to keep living. You're going to wake up tomorrow and the world will be okay. Everyone's a little anxious no matter what side you're on. Things will be okay, but don't stop believing. Don't stop fighting for what you believe in, but don't give up hope no matter what happens tonight, okay? There's a lot of reasonable people on both sides of the aisle. The middle is where most of this country exists, folks. Don't get caught up in the crazy left and the crazy right, all right? The middle is where most of this country exists. Have those conversations. We'll be okay, and get out there and vote. S&Ps, we kick things off up by 8 points right now, trading at 2751. You got the NASDAQ 100, we're up by 37 points right now, trading at 20,123. The Dow under 42,000, 41,985 right now, and you got the Russell slightly in the red, off by 2 points right now. Bitcoin, 69,150. This is where you could really see some volatility, right? Bitcoin, that's going to be a huge reaction depending on who wins. Of course, with Trump, you jump over to gold. Gold up about $7. We have some movement in yields. Absolutely remarkable what's been going on with yields in terms of we're back to lower price and higher yield coming at you right now. And you talk about it, we got the 10-year above 4.3%. We're currently sitting at 4.33. 4.33, just like that. We were at 4.38 at the end of Friday. We were at 4.28 yesterday when I was on the air, and we're currently at 4.33. The yield on the 10-year, you may see some move in yields tonight. You may see some moves in the dollar. What's so remarkable is I don't think anybody quite knows how the market is going to react to either candidate right now. All right, you can make your guesses, but as we've seen it play out before, is inflation that going to be something that happens with a Trump administration? Okay, well, if that's the case, maybe it is. Maybe, though, something comes in with the dollar. Maybe you talk about, is Trump going to influence the Fed, right? There's all of these second, third, fourth level thought processes that take place on a night like this. And boy, if you remember 2016, you remember the move we had overnight when there was a surprise in the futures? It recoiled the entire next day, right? Sometimes the first move is not always the move that plays out. Keep that in mind when we start getting the overnight action tonight. You're going to see the polls come in, and there's going to be movement in these markets. The question is going to be whether it's a definable vote tally that you can make an educated guess as to who's going to win. And if it's hanging in the balance for some of those swing states, especially like I'm talking about Pennsylvania, man, you're going to have to wait. And yes, as each day goes, it's going to get clearer and clearer. They're going to see where those ballots are left that have to be counted. You're going to see where the numbers are that are coming in. If mail-in ballots in Pennsylvania, it does become clearer. But I think Pennsylvania took 4 days last year. And I think it might take 3 to 4 again. As I talked about earlier, great segment on 60 Minutes a couple of weeks ago, talking to the Secretary of State out there, the process they have to go through of they can only begin counting they can only begin counting mail-in ballots in Pennsylvania 7 a.m. voting day. So they started, and boy, they got quite an operation because they have to do it all by hand. They have to open one envelope and then a second envelope. Those mail-in ballots are contained within 2 envelopes. They have to do it by hand. They have to backfold each envelope. They have to put it in a machine as they normally do. And there is a paper trail evidence of every ballot there. Okay? So don't get caught up in the rhetoric that's about to ensue, folks. It's about to ensue. No matter where you fall in the political spectrum, I think you could agree. It's about to ensue. And hopefully we get some clarity for all of us. And yeah, we stop seeing those election ads and texts, to say the least. So, jumping back, we have yields slightly higher right now. Okay, you get the 10-year off by 3 ticks. You jump over to the dollar index right now. We have the dollar a little weaker. This is where it gets interesting, right? We were talking about it yesterday, that you actually have a correlation with the dollar and with gold, okay? And there's all these little, I don't want to call them funky correlations. That's not normally how it plays out. But on a day like today, we do have gold trading higher with a little bit of dollar weakness. But it is interesting that you look at yields. Yields are actually up at the same time we have dollar weakness. So you have a little bit of meandering here. There's going to be a few things in play when you talk about election season. And boy, it is going to be a big one. But yeah, market's slightly in the positive as we kick things off with the S&P's up by 9 right now. Now taking a look at some of these indices, all right? A little bit of a pullback here. If you're watching these markets, I was going through it this morning, and there's a couple of nice round numbers that we're bumping up against, all right? You got 5,700 in the S&P. Pretty remarkable that you're coming back to where we were in this market July 16th or so. Not outlandish, all right? You make a run to 59.27. We backed off a bit. But yeah, you're going to have some support here in this market at 5,700 to about 56.50 if we trade lower. You jump over to the NASDAQ 100. 20,000 right out there, man. You don't have to be a master technician to put this one on the chart, okay? If you're looking at this market, right, that's the area of support we had in the beginning of October. That's the area of resistance on this chart from August when the market spiked higher. And that's also where you kind of jumped around and gapped away in June on the NASDAQ, 20,000, okay? And then you look at the Dow. You could call it 42,000 right there. Now, we got some nice gaps. I'd put it a little area. All right, it's not an exact science, folks. If it was an exact science, you could break it down. But look at that area, right? About 41.5 to 42,000. So you have these areas in all the indices just below where we're trading at. There could be a little bit of support, but that's always the disclaimer. When somebody gives you a speech and you know the but is coming, watch out. But you break below these levels and watch out, man. Okay, you break below these levels. Folks, do not think that somehow where this market was 3 months ago is out of the question. No matter who wins, doesn't matter, okay? But this market, we're at critical levels here. We've pulled back to the area that we had in August, in the area of July, in the S&Ps. You take a look at it, pretty similar action in the NASDAQ. You break below here, 2,000 points. 18 to 18.5 in the NASDAQ. And you take a look at the Dow, a little bit of a different story, but you got about a 500-point range in the Dow to about 41,005. But nice round numbers, right? 42,000 in the Dow, 20,000 in the NASDAQ 100, and we're talking about 5,700 in the S&Ps. All right, folks, come on back. We're going to talk some Boeing. We're going to talk some restaurant brands international. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We jump over to Boeing. So Boeing, they have a deal with the machinists. You have, I believe it's 59% accepting that deal. Now, they're going to like that because, as I talked about before, so the last deal that they got done here was in 2014, okay? And that deal was razor-thin margin that it got passed by. And that presented a problem this go-around because you had 50% of the workers, basically, that voted against the deal they got in 2014. So they were already coming into this feeling wronged. This time, I believe it's 59. What's the number here? 59% of the union members have voted in favor of that accord. So the deal gets done. They vote in favor of the accord. They get a 38% wage increase over 4 years, and that is a little bit front-loaded. Talked about this last time. I think they're getting something like an 11, 12, 13% raise in the first year. So when you talk about compounding, it actually works out to something like a 40+% raise over the 4 years. As I mentioned, though, they didn't feel they got a fair deal since 2014. So everyone always looks to, okay, oh my goodness, they're getting so much money by the year 2028. But the way these workers are looking at it, rightfully so, is I want to look at where I was in 2014 to where I'm going to be in 2028. Okay, that's part of it there. Yes, so you got 26,000 votes. I believe there's 33,000 in this union, so 26,000 votes. All right. And yeah, they're going to be back in maybe as soon as tomorrow is the number there in terms of some workers. Hourly, they're going to be back in there. And check it out. They got, I believe it's, 6,000. Where is it? They got 6,000 planes in the backlog. Yeah, and that's the union, but saying they need us to build them. Now, when you look at these numbers here, okay, Yeah, 41% voted to reject the deal, but as I mentioned, that's a 60-40 vote. The last one was close to 50-50, a much better portion in terms of where things will be in 2028 even, okay? You got a 60-40 vote. That's a better situation coming into 2028 than it was in 2014 when they barely got in there, 50-50. And yeah, this is as to whether members should be worried about layoffs. Now the strike is over, okay? It's always interesting how this gets in there in terms of you have a range of cost cuts, okay, to weather the fallout from the strike. You have potentially a 10% reduction in the workforce along with hiring freezes and travel restrictions to preserve cash. And this is the new CEO, Ortberg. But that's what the union say, hey, we got 6,000 planes to build, okay? They got to get in there. They got a backlog. They've been down for 53 days. Yeah, and they talk about it here as well. There was a sense of injustice over the low wages locked in by the 2014 contract. And that is why this one was even harder, which is pretty promising that they actually got to the level that they're now in a 60-40 situation. So when it does come around again, 2028 is going to be around the corner, man. We know how time flies, right? Yeah. Because you think about it, right? We're coming up, folks. I got to do it in my head. Almost 5 years since COVID began. Doesn't that seem like yesterday? I know time is amazing, how it plays tricks on you. 5 years. I got to compound it in my mind. Tommy's going to be 4 in February. He's going to be 4 in February. Do you remember when he was born? It's just amazing. But nonetheless, good day for Boeing. They got a little reaction. Pretty muted, though. You think about it, right? They were almost at 157 yesterday. You closed at 155. You're trading at 157.64. You spiked to 160. They've still got a long way to go. But this is quite a relief for Boeing. We talk about the uncertainty of the election, right? The markets hate uncertainty because it's very difficult to price, okay? The market loves when at least there's certainty and they can price the risks accordingly. When you have radical uncertainty, there is radical pricing that is difficult to assess, and therefore they give themselves more leeway. There's more volatility. There's more potential for losses. Therefore, they cut their, it all factors in. And yeah, only a slight muted reaction there. You take a look at that on a weekly. We back it up on a monthly, okay? And yeah, Boeing is where you were almost 10 years ago. Now, it's been quite a rise and fall. As I talked about, they still have a quality control problem that they're going to have to get a hold of, folks, okay? I mean, you're talking about an industry where, unfortunately, they are going to be clickbait for the next couple years. Anytime anything goes wrong, there's going to be the Boeing airline, the Boeing engine, etc., right? It almost clicks themselves. But yeah, you are back to where you were basically almost in 2014. You're at 144, and we are literally right at where you were in February of 2015, almost 10 years ago for Boeing shares. Maybe that's the beginning of the turnaround. It's a nice round number, 150. You can see technically on this chart of Boeing, right? This is what I was talking about yesterday. It doesn't always have to be rocket science, man. Find an area of visual support and resistance. Now, yeah, it's not a science, okay? You could make the case that maybe this is actually your area of support and resistance, right? Where maybe you go from about 120 to 150 in this chart. It's just visual. Sometimes it's just that simple. Now, you haven't been back down there from the COVID lows and from when they were dealing with literally the fallout of the planes that were dropping out of the sky because of their 737 MAX. All right, but nonetheless, you see where we're back, man. We're back. We're almost at 150. You're going to pop today to 157. And that was the biggest one in the short term that was hanging out there, man. Because with the bad feelings that have been laying out here, and I don't have Boeing, folks, okay? But I'm beginning to take a look at it. I am. You came into the year at 260. You're trading at 155. They have a deal with the machinists for the next 4 years. They have a huge backlog of planes, and you're getting in where you were 10 years ago. Okay, can this thing trade to 120? Yeah, it can. It can go down 25, 30% from where it's at right now. But risk-reward lies, yeah, and you can always put your stop against the wall. Maybe you put it right under 150. Maybe you put it at 148, okay? The other way to enter trades like this, and I'm thinking big picture here, but let's say you want to build a position in Boeing. All right, let's say that you agree with, okay, maybe it's coming into a nice area of 150, right? We put things back on a 3-year weekly. You're testing where you were on October. You're finally catching a bid. Maybe you think there's nothing wrong with scaling into it, folks. If you want to build a longer-term position in Boeing, maybe you're looking for something in your retirement account, right? Maybe saying, you know what, man, I'm getting into Boeing where we were 10 years ago. This thing is going to have some legs, okay? It's going to have some wings, no pun intended. build a half position. Maybe you get in a third of a position right now, okay, and maybe you save, 2/3 of your position to put on sometime in the next 6 months or a year, something like that, right? If it goes lower, you dollar cost average in. If it goes higher, you can't complain when you've made some money by entering at this price point. And yeah, you are dollar cost averaging up, but it decreases the risk to a certain degree where, yeah, you're going to have some volatility on this equity. We were just trading a quarter ago at almost 200. You're at 150. The strike's over now. Always remember that you can scale in, because if you're going to build a position and it's a longer term position, sometimes that's a beneficial way to do it, because you're not in no man's land right now. But you got two lows out here at 120. Okay, you're at 150 on a longer term basis, as I just went over. Yeah, that might be a nice critical area. You're back where we were in terms of the highs of 2015, but there's nothing to say you can't go a little bit lower. And if you go higher, where do you stop? I don't know. Maybe you're on your way back to 250. That'd be $100. That's just where we were at the beginning of the year. And that is going to be another area you got to blow through, though, because you get up to 250, man, you're going to have some resistance, because that's the highs of 2021. That's the highs of the beginning of this year as well. But nonetheless, Boeing going to get you a lift this morning. All right, folks, we're coming back for the opening bell on Election Day. As I said, make sure you get out there and vote, no matter what state you're in. We'll be right back, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
markets open. You got an S&P opens up the session up about 9 points, trading at 57.53. NASDAQ 100, we're up by 84. That's about 0.4%. Dow slightly in the red by 35, and you got the Russell, negative by about 10 points or 0.5% right now. Bitcoin 70,000 almost, 69,855. We're up by a couple $1,000s on Bitcoin. Crude continuing to rise, 72.21 right now. And this is kind of where we were on the highs we had back in September, that area of the highs you had in October before you rolled over. There's potential for geopolitical risk out there. Don't expect the crude market to react that big in terms of where you are on the election. All right. Yes, Trump gets in. They're going to open everything up they can to drill. Okay, a little bit of a different story with Harris, of course, but don't expect a huge reaction. Okay, and this is a critical area. You're talking about an area of either support back in June, right? Support back in August. We also got a bump from this level back in late August, and then you're bumping up against some of the highs. Kind of a similar deal I've been talking about with some equities recently, right? You don't have to overthink it sometimes. Doesn't mean that this is some holy grail of where we're going to stop. But look at that area on this chart, okay? That's a daily. Look where we're coming into. You better believe that's a critical area when we've turned on a dime on many occasions here. Now, doesn't mean that that's the case, all right? October 3rd, you blew right through it. October 14th, you blew right through it to the downside. But yeah, look where we are, critical area. You got through this level, probably on your way to $78. You turn around, probably on your way to $70 to $68 on the downside. Crude right now up 72 pennies, though. You jump over to the gold contract. Gold catching another little bid right now, 27.57. We keep our eye on yields. You jump over to the 10-year. Yeah, right now we're trading at about 4.33, and we keep our eye on the dollar as you have gold trading higher, and there's the move, man. Boy, if this is the turnaround, then get ready, you gold bulls. Yeah, the dollar is weaker, even with yields higher this morning. Now, yields are marginally higher, but look at this turnaround, man. Okay? And again, you talk about critical areas, right? Look at where the dollar has turned. It's the same critical area that we had going on over here in July. All right, you chop around between 104 and 105. Same thing, we've chopped around between 104 and 105. Now, we've never quite had a move like we had in moves following a Fed decision to make the first cut coming out of the line in terms of their regime change, all right? They're not regime change. What do you call it? Their attitude change, whatever it is. They're now in a cutting cycle. Okay, the market said, yeah, you may be on a cutting cycle, but man, you're ahead of yourself. Okay, we're going to reprice it, and they've repriced it. But guess what's coming down the line? We have a cut coming down the line on Thursday. All right, we're going to pull up the CME FedWatch tool because now we get to a much more reasonable stance. All right, I was in there talking about, folks, you got to be kidding me where things were when we came into the Fed. All right, they were talking about like umpteen cuts over the next 6 months. My favorite one was going out to the June meeting when we were doing all this, okay? And it doesn't even encapsulate where this thing was because you only go back a month. And actually, the low in yields was at about 6 weeks ago now because that's how often the Fed meets. But nonetheless, you can still see the radical difference. Right now, though, by the June meeting, okay, now remember, the Fed right now is at 4.75 is the lower boundary, all right? You go back to the meeting that we have taking place on Thursday, there's only a 4% chance the market thinks that we stay where we are, the Fed, and there's a 96% chance they come with a quarter-point cut. You go out to December, and the market says there's about an 80% chance we get 2 cuts by December. So you're really looking at right now a quarter point now on this meeting, and then a quarter point coming down the line on December 18th, my sister's birthday, Caitlin. Where things get much more interesting as you start going out into the future. But when you take into account that the market thinks that by December we're going to be at 4.25%, okay, then you go out to June, it's not that outlandish that the market is thinking we're going to be somewhere around 3.75. That's only 2 more cuts over the next 4 meetings after December. So remember this, right? Short term, we're getting a quarter-point cut on Thursday. December, we're most likely getting a quarter-point cut. Now, we know this market can move dramatically in 6 weeks, okay, which is what that December meeting is, so we'll see. But right now, and then you say, okay, after that, let's say we go after December, that's not bad. That means that they're going, skip a meeting, maybe cut in March, skip May, and then maybe cut in June, and that gets us to 3.75. Okay, and realistically, folks, 3.75 to 4%, maybe that's where the Fed needs to be by June. Okay, we're talking about 7 months into the future that the Fed would have an overnight lending rate of 3.75% to 4%. Probably hard to make the case that that would not at least be slightly restrictive still. I don't think that that would be accommodative. Right? I don't think the natural the rate of growth, the R star like they talk about, is near 4% right now. I don't think it's near 4%. You could probably make the case it's near 3%. Can probably make the case, it'd be a little bit of a reach, it's near 3.5, but I'm sure if you got assigned that article, you could make a reasonable case as to why the underlying forces in this economy are really growing at 3 to 3.5%, but 4% is a tough one, man. So they have some room to cut here. But they did not have room to cut where the market was pricing in before, where somehow the market was thinking that we were going to be at like 3% by June when we're at 4.75 right now. That's where they were pricing it. That just would have been mammoth cuts across the board. The economy is not that weak. Might be a little weak. 12,000 jobs added, right, for that October number. But there's a lot of noise in there. But nonetheless, much more reasonable. So we got a cut coming down the line right now in November. We'll see what they say. I think that you're going to get an especially data-dependent Fed when we come into things on Thursday. And the reason why is Chairman Powell probably regrets getting a little bit over his toes on those skis of his. There was no need to forecast and let the market think the amount of cuts that were coming down the line were priced in. Nonetheless, that's what he allowed the market to do. The market has recoiled on the data, and with the storms that you have out there, that's going to create a little volatility, okay, in the numbers. So he's going to say, listen, we got a little bit of noise in these numbers. We're going to have to see where the data goes. We've cut because we feel like we can still be restrictive at 4.5%, which would be the lower boundary of their rate. But we'll see where we go from there. I think he's going to try and leave himself a little bit more room going forward because of how he trapped himself 6 weeks ago and how that turned out to be wrong from where the market is. He's going to allow that, guess what? We have that data, and we're probably going to have the election still playing out. So I don't imagine him locking himself in and making news on Thursday when they're still counting ballots potentially in Pennsylvania. Very interesting to see how he's going to handle that podium, as literally millions of Americans are going to be watching the news. There's going to be numbers breaking every single, they're going to give you totals every so often in some of those numbers. And if it's a close one, it's going to matter every time they come out with them. And he's going to be talking at a time when the election is still up in the air. All right, market's catching a bid. S&P's up 25 points right now. Let's jump around to some of the FANG stocks. Magnificent 7. Apple up about 0.4% this morning, trading at 222. We jump over to Microsoft shares, up by 0.8%. Amazon up by 0.5% right now. Google shares up by 0.2. Meta shares, there you go. Meta up by 1.8%. You jump over to Tesla shares. Tesla catching a bid, up by 3.6%, up $8 to $251 right now. And yeah, so we got out of that short this morning on the open. And listen, folks, you want some volatility, man, go trade some Tesla, because boy, if Trump gets in, this thing is going to go through the moon. Of course it is, because Elon's going to have a spot somewhere in the administration. Okay, interesting to think about what happens if that doesn't happen. And again, it's going to take a few days to play out, so don't think it's all happening overnight. But nonetheless, you got Tesla up by $9, S&P's up by 25. Come on back, folks, we're talking some early earnings. Palantir higher, Yum Brands, Restaurants International. We'll be right back, folks.
TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets in the positive. Jumping over to the XAU and the HUI. So both of those ETFs with the miners, of course. But the HUI, okay, is the one that includes only stocks that don't hedge their gold beyond 1.5 years. So, but check it out, folks. If you're looking at it, I put these in the gold report this week. You talk about well-defined channels. Now, on the bottom side, that's pretty well-defined. The top side, you could make the case that maybe that gel is there. A little bit of linear regression, all right? Maybe it's somewhere there, a little tighter, right, depending on where you are. But, boy, it is crystal clear on the XAU and on the HUI, and they're both right at the lower boundary line, which is interesting. Check out the HUI, right? These are dailies. You're bumping right up against it, man. Look how well defined that is, going all the way back to March. Now, this thing broke out in terms of gold, really started to break out in February. But if you want correlation to the price of gold, you're better off going on the HUI, okay? Now, the HUI only includes gold miners. The XAU has gold and silver stocks in there, okay? But what you have is you have the HUI. Basically, they do not employ hedging. And the technical definition is they don't hedge their gold production beyond 1.5 years out, okay? Because some companies really push it out. You'll get that in the XAU. But it is remarkable that on a charting basis, they're both just gangbusters, man. The XAU, right, up from 120 to 160 from that beginning of the channel in March, and then you go over to the HUI, you're talking about up from 240 to 320. So almost percentage-wise, very similar, but both of them well-positioned towards the bottom trend line. So maybe you're looking for a little bit of a bounce. We'll see. Critical areas. You jump over to that gold contract, catching a little bid today, up by $7 at $27.53 right now. All right, we jump to some equities with their earnings. Palantir, they're crushing it, man. They crushed it last earnings, and they crushed it this earnings. You're talking about going from about $25 coming into their last earnings event. You came into this one at almost 42, and we're trading at 49.27. They blow it out of the park yet again, and we'll bring it over. And they got a rosy revenue outlook is how they put it there. So the full year revenue view surpassing the expectations. And yeah, they're going into the S&P 500, but nonetheless, they beat on earnings 10 cents. Not bad, man, when you're trading at, $50 and you're making 10 cents in 90 days. Future growth. Revenue, $726 million versus $700 expected. Now, what I will say is, you talk about an absolute growth in terms of Palantir right now. Yeah, you're getting up there, to put it lightly. But Palantir, nonetheless, they're going to be higher. Revenue grew 30% year over year in the quarter. 30%. Net income, $143.5 million. And yeah, up from 71 million. So they're growing. They're growing in big fashion. And they had big expectations because last earnings they crushed it. And they crushed it again, man. Up by 50. All right. On the flip side of that, Burger King, Restaurant Brands International. Yeah, not so rosy on their outlook. They're down by about 2.7%. And when you check out some of these numbers, man, they're a little bit dicey, to put it lightly. So, Burger King parent falls short on third quarter expectations. They miss on the top and bottom line of the current quarter. So they take in $2.29 billion versus $2.31. Earnings of 93 versus 95 cents. But check it out, same-store sales grew just 0.3%, but Burger King, Firehouse Subs, and Popeyes all reported same-store sales declining in their home markets. Now, they talked about that for October, okay, low single digits same-store sales. So they're telling you that in October, the trend has reversed. They were down on same-store sales, and now the stores are showing low consumer sentiment. One thing I found interesting looking at this earlier, and this is Burger King talking it up, okay? Their CEO, Josh Kobza. If you look at some of the things that really drive finance for our guests, everything from gas prices are down, right? I mean, think about, and it's just always, the politics of things, right? When gas prices are up, whoever is in office, they eat it big time. Gas prices are around $3 when everything else is expensive. Nobody's talking about that, but it matters. But what I did find interesting is interest rates are starting to go down. Somebody's got to tell their CEO what's been happening for the last 6 weeks, because interest rates are not going down, Mr. Kobza. Anyway, inflation has really started to moderate. That is true. But interest rates, they're not going down. I wonder if we're going to see a little sticker shock when we start talking about interest rates, mortgage rates, car loans, etc. Burger King same-store sales fell 0.7% during the 3-month period that ended in September. And yeah, they're talking about that things are different. But boy, you talk about it, man. Same-store sales, right? Burger King, down almost 1%. Popeyes, down 4%, okay? They were looking for an expected 0.2% gain. I'd be careful on this Restaurants International right now. And Firehouse Subs, down almost 5%. Market was only looking for barely a decrease of 0.4%. Whew. I would. That's scary numbers. You're only down by 2.7%, but we take a longer term look at this thing, and probably on our way back to $60 to $61 on this. Yeah. You don't want to see same-store sales like that, folks, across the board. And then they're just talking about things are okay in October. There hasn't been that big of a difference, folks. I mean, the reasons that CEO just gave, okay, gas prices are down. They've been down. Okay, gas prices were doing just fine in the quarter that they reported. Interest rates are dropping. Interest rates were dropping in the quarter that they just reported. They've actually gone up in the last 6 weeks. All right, look at what interest rates did from May until basically the end of that quarter. All they did was drop, and then they've risen. So I don't know if he's going to get the tail of his wind like he's talking about. The numbers seem to line up, but you talk about a miss, man, right? Burger King down almost 1%, right? You had Popeyes down dramatically in there, and Firehouse down dramatically as too. They got a problem. And when you talk about it across the board, they're going to run promotions, but you got to fix a problem with Burger King, Firehouse, and Popeyes. That's a tough one, man. All right, we jump over to Yum Brands. With their numbers, up by 1.62%. For Yum, up to 135 right now. We jump over to their numbers for Yum. They miss estimates, but guess what? They're higher. And yeah, same thing. KFC and Pizza Hut, declining sales. How about both KFC and Pizza Hut? Same-store sales declines of 4%. All right, now not as dire as they're talking about, but guess what? They miss on top and bottom line. All right, net sales rose, but same-store sales are a problem. So watch out for these restaurant companies, man. Now they talk about the Middle East, they talk about everything else, but KFC's U.S. same-store sales slid 5% in the quarter. That is a mammoth number, folks, when you talk about the reach they have. 5%? Yeah. The market is KFC's second largest, only trailing China. They're big in China, but 5% in the U.S. So I don't know what's going on, man. But Taco Bell, yeah, they're growing. Same-store sales of 4%. Cheesy Street Chalupas. I haven't had Taco Bell in a while, man. I used to love a Baja Chalupa. Baja Chicken Chalupa, man. That used to be my Taco Bell. And I'd pay for it for days afterwards. But Baja Chicken Chalupas. Couldn't quite do the beef. Never was quite in the beef. It seemed like almost a refried bean. concoction, that beef. But I could do chicken back in my days when I was at college or just after. Yeah, you gotta love it, man, those days. But yes, probably not the healthiest thing in the long run. But hey, everything in moderation, folks. You want a little Taco Bell? Have a little in moderation. You're all right. Just don't live off it. All right, folks, stay tuned. We got one more segment. We'll come back. We'll talk some more equities. We got the 10-year right now, negative by 3 ticks. We jump over to that dollar index. 103.63. We hit 103.57. We were just at 104.30 as of Friday. Remember, folks, get out there and vote today. It's election day. We'll come back. One more segment. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. The markets continue higher. S&P's up by 35 points right now, catching a bid to 57.78. We get the NASDAQ 100 up 180. And yeah, you check back in on Yum Brands up by 1.3%. Everybody's talking about their go-to. I hear you, right? Everybody had a go-to. Or not everybody, but yeah, that's quite a go-to. Duffy, Dan, those are good ones, man. It's interesting. It made me think of, I was at Olive Garden this past weekend. What is Darden? DRI? Is that them? Darden Restaurants? Yeah, Darden Restaurants. So we're at Olive Garden. It was a pretty good experience, but what was interesting there, right, is talking about your go-tos in college. So they have endless pasta or bottomless pasta, something they call it like that, okay, for $13.99 or something like that. But you add a protein to it, and it's like $4 or $5 extra. And I'm sitting there with my mom, my sister, Tommy, and I'm saying, yeah, never-ending pasta bowls, okay? And here it is. And this is not, I don't know in Darden, folks, but I'm telling you, I thought of myself in college. For $13.99, now you add a protein on there, and it's like $4 or $5 extra. But I said to myself, and here's some what you get. You get chicken, Alfredo, right? You got meatballs with pasta. I said, man, if I was in college and I could get a never-ending pasta bowl with chicken or meatballs on top of it for less than $20, I would come to Olive Garden every Sunday and sit there for 5 hours and eat that thing, man, for under $20. Yeah, that's not what I get. But it comes with a unlimited soup and salad and breadsticks. Think about that this day and age, right? You go out, endless pasta bowl, less than $20 with salad, bread. I mean, that's a heck of a deal in this day and age. All right, folks, markets. They're excited for Election Day. S&P's up by 40 points, trading at 57.83 right now. You got the gold contract up $9 at $27.55. Folks, thanks so much for kicking off your trading day right here at TFNN. Stay tuned. We got our man Basil Chapman coming up next. And don't forget, get out there and vote, folks. Participate in the beautiful thing such as American democracy. You got to love it. Stay tuned, folks. Basil's coming up next. I'll see you tomorrow. Have a great Tuesday, everybody.